For 14 years, Arcimoto has been financed incrementally, building value far in excess of our spend. And our ATM facility that we have with Canaccord serves as a backstop for this approach. It lets us be opportunistic when conditions are favorable for our investors without entangling us in toxic deals that plague the microcap market. That being said, we think the time is right for a holistic solution to fully fund the business plan to scale, including the right tools for the job. This includes targeting the DOE for big production capital expenditures, and most of that will land in what we're calling phase 2 of the ramp development process. So that's the build out of that does not start until next year. Also fleet financing for our rental vehicles, proper real estate financing, and then also long-term strategic equity partners. I have great confidence in the team that we have assembled to tackle this effort, and I look forward to sharing more on this front soon.
Do you think he's already worked out some equity partners, as he says, and that's why he looks not worried?
Yeah, because look, we talked about that. They have $17 million in the bank. They burn roughly that amount per quarter, and they used to have that amount at the end of last year. So we're through the first quarter now. They have burned that roughly. And they won't get the ATVM loan, or they won't need it until next year. So how are they going to get through this year where they need 100 million? So they have to have something in place right now that they will tell us in the next couple of weeks.
I mean, they better, because it's game over, isn't it? Basically. Well, not game over, but you have to dilute immediately.
Yep.
And the stock will tank to $3, $2, whatever it'll go back to. And the shorts, they're still piling on. The short interest is even higher now.
Yep.
Especially after this quarter. Like, you saw the stock drop 25% one day. In that, I just want to point out, by accident, this happened. Because I had a buy order for 10 options. Let me show you this.
Oh, no. Oh, God.
So I just want to point this out, because it's funny, because I left in a bunch of options. And so this is what I wrote. It's been there for a while, for like 30 days, 50, I forgot what it was. It's been there for a while. Like, I think you have 60 days where you can leave a good till canceled order. And I left it in, and the stock dropped without me paying attention. And I bought 10 options at $250, which is not a bad price. So $5 strike 2024. That means if it's over $750 and they're not bankrupt, these options could do really well if I keep them. But I wrote I'm not sure, because I was looking into other stuff. I was buying other things. And I wrote, this was basically an accidental purchase. I had left this in the account as a limit order and did a good till canceled, and it executed today after a month or so of sitting around. Totally forgot about this. I may or may not keep it. Looking at another investment, not FUV right now, as we talk about, like the PayPal and Square, and there's some other things I'm looking at, even Facebook.
Yeah.
But, right now I have 10 contracts for 2024. I'll add that to my stack. So now I do have an extra 1,000 shares supposedly in the future if I keep it, assuming this shoots up to the moon. So I thought that was funny.
Congrats. All right.
This shows you do not leave good till canceled orders if you're not actually prepared to buy them. Okay.